Hello guys, welcome to another trade breakdown video. Today I'll be breaking down the trade that I took on Friday, 2nd of August 2024, as you can see. And finally I have now arrived or reached the 50 backtest mark. I have done 50 backtests. I have written 50 backtests, but I have already done more than 300 backtests, as you know. That's why my information in the markets, my intuition in the markets, it's so good now. I literally can see the moves before they even happen, but I don't take them because I follow my strategy. So I wait. If it's only aligning with the strategy, then I take it, or else I don't, right? So that is one thing. Obviously the practice that you put in the charts, put in anything, you are gonna get rewarded for it, because God is watching, the universe is watching, right? So the universe and God rewards those who put in the work. So you are gonna get that, no problem, no need to worry for that. And coming to the trade, as you can see, on Friday my bias was clearly bearish according to how this Thursday candle closed. And bearish as in, like, I am not looking for a move like this, okay? I will be looking for something like very quick because of how this candle closed. And I don't trade the rebalance of price, I trade with the trend. So I was looking for sells very quick, meaning from the very closest demand zones if I'm looking for sells. And according to how this DXY closed and how it's respecting this demand zone on the daily time frame, right, it's clearly looking like it's respecting this demand zone. And now I will be looking for buys from on DXY, which will be sells on GBP USD. So that was my daily bias. I was looking for sells. And my weekly bias, as you can see right here, I've written it. On GU it was bearish, and on DXY it was bullish. Clear, right? So if I'm looking for sells, I will have to look for some sort of supply zones. As you guys know the drill by now, it's very simple. It's a step-by-step process, and once you do it a gazillion of times, like I did, so many times I lost the count how many times I repeated the same drill. Now I exactly know which condition is good, which condition is bad. If a market is trending, that condition is good to trade, right? Right now it's trending, but whenever a market is trending between a high or a low, that is when it's tricky, very much tricky. For example, on the hourly, this is the lower high, this is the lower low. The market has been trading between these two zones right here, meaning the highs and the lows. That is when it's very tricky. But right now that's not the case. Clearly we can see on the 4 hourly the market has been trending to the downside, making new lower lows and lower highs, right? That is exactly when you want to trade with the bias, obviously. So I was looking for sells. On 4 hourly there was nothing, so on the hourly I was looking for sells. And if I'm looking for sells, I will look for some sort of supply zones. There was one supply zone right around here. You can mark this supply zone on the hourly. I waited for the Asian range to close as always, and I have just told you guys, right, I will look for a supply zone or a trade from a very close zone because of how the candle closed. So basically what I was doing for on the hourly, there was no sort of supply zones, as you can, yes, on the hourly there was no supply zones. And yeah, this was already in the Asian range. So what I tend to do in this kind of situation is, like, I go to the M30, to the lower time frames, and then mark the supply zones. So on the M30 we can clearly see this was the supply zone, which was made on 11 PM Indian Standard Time, which is obviously not our timing. It is Sydney session, it is the end of New York. It is not ideal to take the trade from here anticipating a huge move. Obviously you can take trades from zones which are not in your time zone, for example not London or New York, but you cannot anticipate a huge move from there, like a trend reversal from there, right? You can take your trade 1:2, 1:3 risk to reward, like I did in this trade, right? You can use your 1:3 risk to reward strategy here, right? So this was also a MAC model, Rob Donos MAC model. As you know, we execute the trade between 7 AM to 10 AM UK time. Higher time frame, everything is the same. All we do is take the trades from 7 AM to 10 AM UK time, because the purpose of this strategy, I understand now, is to enter the trade and ride the London liquidity. Meaning, if everything you want to see in a trade is there, and before the London session if you can enter a winning trade, then obviously, right, you will be on the, if you are on the correct side of the market when London session start, it will be a beautiful trade for you, right? So that was the idea that's the idea for this strategy, I believe. And yeah, I can guarantee you for a fact it's 90% that. So obviously on the dollar I was looking for buys to correlate it with DXY, and on the dollar also it was reacting from some sort of demand zone right around here. This demand zone is varied due to this break of structure, as you can see on the M30, so it was also aligning with DXY. So that is when I go to the M15 time frame, and for the MAC model I will show you exactly what I look for. So higher time frame was there, right? Bearish point of interest mitigation was there, M15 point of interest. Inducement in this trade, inducement was not there, right? So there was one red flag, the inducement was not present in this trade. Mid time frame rejection was there, M15 rejection we can clearly see. Clearly the M15 rejected this zone after sweeping this high, and we entered after the M5 change of character at the equilibrium. As you can see, after this candle close, I didn't enter here. I waited for the pullback to the equilibrium, and then I entered with my stop loss, with giving my stop loss a beautiful breathing room right here, 5.5 pip stop loss, targeting a 1:3, which we got in literally 30 minutes. If I get a trade like this on the live markets, I fucking pass a prop challenge in one single trade in 30 minutes. That's possible, bro, with the strategy. But you have to follow your rules, follow your plan. All you can do on the market is follow your rules, follow your plan, and the rest will be history. All you can do is that. Don't focus on what you can't do. Only focus on what you can do. That is following your plan, following your strategy, and believing in yourself, and believing in your strategy, and believing in the probabilities, right? I am doing this backtesting to believe in my strategy that it works, and obviously to show my eyes that it works, and to build the confidence, right? So I took this trade, beautiful trade, right? So after I get my 1:3, I target the Asian low because that's my strategy. We got a 1:4.5, and as I told you, whenever the supply order block is not in your zone, meaning in London and New York, that is when I don't anticipate a huge move from there. And also it was an NFP day. If I show you the news on Friday, it was NFP, so obviously you can hold. Now I am in a winning trade, right? So why will you not wanna ride the NFP? So what I would do, I would break even the trade, and then I would ride the New York session, which in this case it would not work because literally the NFP was against me. As you can see, boom, bro, literally, bro, a huge fucking move to the upside from here, right? So this was the trade, guys. It is very, very simple. Once you put certain systems in place like this MAC model, your strategy, and if you only take trades in those zones, trading is not hard, mate. You have to be in the markets from a certain time period to a certain time period, and the rest of the day is freedom. That is what trading provides, and if you can understand that, which I have, you can do it. Bosh soon.